Hello traders, welcome to your daily market update for Wednesday the 27th of May 2015. Overnight we've seen the US dollar continue its charge as that was really the main dominance for the markets yesterday. And we're seeing the market really adjust to the prospects of an interest rate rise from the US Fed. You can see across all markets that tone has been carried through, where we've seen the bond markets continue to surge, we've seen equity markets have a pullback, we've seen the sell-off of commodity markets, and we have seen the extraordinary strength in the US dollar. I think that given that the durable goods, the home price index was improving and we had a tick up in market PMI composite, I think overall the data has been quite strong and the market is starting to convert some of those that were a bit dubious or skeptical as to the Fed's intentions to raise rates. And the further we move along with the data, and if we continue to see some solid data prints, I think that you're going to see more and more people buy into the fact and reside to the fact that we could potentially be getting an interest rate rise in the near term. So let's have a look and see what we've got today. We've had some construction work come out for the Australian, and it come in much worse than expected. It's not really a great surprise. Other than that, we don't have a lot to do with data today on the docket. We do have some consumer confidence coming out of Europe, and then we do have the Bank of Canada's interest rate decision. They're the two main focuses for the market in today's session. We'll keep an eye out. I'm pretty sure that the Bank of Canada's interest rate decision is going to be left on hold, and the consumer confidence is going to be pretty close to expectations in my opinion, but we'll wait and see and how the market reacts there. We've also seen that Greece is continuing to weigh down on the euro, and I'm sure that the dramas going on there aren't going away anytime soon. In fact, I think we are getting to the pointy end where Greece is really running out of money, and they're going to need to do something and come up with an agreement soon or risk defaulting on their debt. So we'll see how that plays out. It's a day-to-day event. It's not something that you can forecast, as I'm pretty sure the people involved don't even know how it's going to pan out. All right, let's have a look at some charts. As you can see, the US dollar has continued its rally. It's been a very impressive rally here. Yesterday we extended the gains, and today, if the market does continue higher, I think 98.5 is definitely the resistance level that it will need to break. Other than that, since the data is light today, and if we do get some positive data coming out of other economies, we could see that this has been an opportunity for the US dollar to have a little bit of a pullback after what has been an impressive rally. I'm only talking just a small correction, nothing too major, but maybe the market will use today's quiet data as a chance to take a breather. So just keep that in mind, but nonetheless, the overall trend and the longer term outlook is still remaining for the US dollar long position. Let's have a look at the New Zealand versus the US dollar. And as you can see here, the falls extended yesterday. We broke through the support of 73 cents. We're making our way down to 72 cents, where historically we have seen support. A break of this level would continue to send the New Zealand dollar much lower. But for now, we will see how it plays out. And it's all going to be subject to the US dollar momentum in today's session. A very similar story for the Australian versus New Zealand. The falls have been quite aggressive, as you can see from the highs here above 81 cents. I'm sure the RBA is very grateful for the falls that we've seen recently in the strength in the US dollar, as the Australian dollar is now making its way towards to test 77 cents. A break of this would open up the new lows down here at 75.5 and beyond. However, if we do get that breather in the US dollar, as I mentioned, well, then we could just get a little bit of a relief bounce here, but nothing to suggest a longer term reversal. The Great British Pound has continued its slide with some pretty big falls yesterday, trading below the 200-day moving average and moving continually lower, and we should be able to see that if the US dollar continues its momentum, we could be coming down and testing the 100-day moving average before long. However, the recent moves have been quite significant, and if we do get a US dollar profit taking coming in as a result of some stronger data elsewhere, we could just get ourselves a little short-term bounce here, but nothing to suggest a major correction at this stage. The euro has broken through $1.09, and the extraordinary slides continue, and if we do zoom out here, you would be expected an not unrealistic to believe that we have the moves here being this is a simple correction of what is an underlying move, and the euro does want to extend its moves lower in terms of the rhythm and the patterns on the daily chart. I do expect euro to continually undergo a lot of pressure from the Greece situation. However, if we do get a resolve, we do expect a relief rally from the euro just as risk is taken off the table. I'm sure that the euro dollar will enjoy a bounce, but how much of a bounce that is will yet to be remain. But the falls and the momentum is definitely to the downside here for the euro for the time being. The US dollar versus the Canadian dollar has been an extraordinary performer as the US dollar has continued its charge, but oil has been caught up in the commodity sell-off as the market is taking a risk-on approach, and gold is falling, silver is falling, and we're seeing oil getting caught up into that, which is only helping the US dollar versus the Canadian dollar continue to rally. This historical support line over here that took many months to break to the downside has now been broken back through, and we are trading back above it. So any moves lower could actually find support off the historical levels between 24 and 23.5. I think that today's Bank of Canada meeting will be very interesting for the pair. If the meeting does come out dovish and they are concerned over the oil price and slow growth in the region, we could see the US dollar versus the Canadian dollar continue to push higher and test $1.26. That would be roughly around about the next resistance level, and we'll see how things pan out there. US dollar versus the Japanese yen has had an explosive breakout of this triangle and this longer term range that you can see has been going on here for quite some time. We are now trading at multi-year highs, 8-year highs, and we're not far off. If I go out to a monthly chart and zoom out for you, you can see here we're not far off 15-year highs, and the market is really sending a signal, and the US dollar versus the Japanese yen is its star performer right now. Well, that's it from me today. Keep an eye on the data from the Eurozone and the Bank of Canada. Also, continually monitor the US dollar index, as it is important for price action. It is controlling price action across a lot of the major pairs right now. I'll be back again tomorrow, so until then, trade well.